By talking about how the markets shut shop today. But amidst the start of all the excitement that there is as we step into 2017, we thought it would be best to kickstart the year by getting you one of the most influential voices on the Dalal Street to make sense of the market over the course of the next 12 months. So today's day was a bit somber, a bit sideways, a bit quiet around 8100, 8150. But really, the focus of the day was that big interview that Nikunj Dalmia did with Rakesh Jhunjhunwala. Really a one-stop shop for the biggest market voices, and this has been the most credible view that we have received on the very first day of trade for 2017. Big Bull Rakesh Jhunjhunwala opened up to Nikunj a little while back for the first time post demonetization, sharing his vision for 2017. He also highlighted that the worst is priced in for Q3 earnings and that FII selling is likely to reverse soon. He hails that the market resilience will continue and says we'll be disappointed if the Dalal Street doesn't make new highs within the next 12 to 18 months. Also believes that the sell-off throws up a good opportunity to buy especially marquee investments or shares of good quality companies at cheaper prices. Housing finance companies as well as private sector banks feature high on his hot list for this year. However, he advises staying away from metals. We'll get you bits of that exclusive mega interview as we go through our evening programming. But first, a quick summary of how the day's action panned out on trading desks. The first trading session of 2017 ends on a cautious note. Nifty plunges after hitting the crucial psychological mark of 8200. Banks drag the index lower as more banks cut lending rates. Banks take a tumble for sure following the move to slash lending rates. Country's largest PSU lender, SBI, cuts MCLR by a whopping 90 basis points. Talk about transmission. Peers follow suit with PNB lowering rates by as much as 70 basis points. Brokerages expect margins to take a hit in the short term. However, say downside will be limited. Meanwhile, strong tractor sales drive M&M's monthly show. Stock edges back into the green territory after sales fall less than 89 expectations. Cash band dents a near 2% hold in Maruti's December sales. However, robust export growth of 47% saves the day for the automaker. Also, Aisha ignores demonetization blues, reports a whopping 41% jump in sales. With voices lined up on the show, we will make sense of the markets on the first day of the new year. As always, and as highlighted at the start, we will get you a slice of Rakesh Jhunjhunwala's exclusive conversation with Nikunj Dalmia, our Chief Editor Financial Markets. Coming to you in a bit, we also will make sense of the markets with Neeraj Diwan of Quantum Securities and Manav Chopra on the technical side to approach trade tomorrow. The question that we are essentially asking, and this is a broad question just to start off the year, because really enough and more crucial, influential market voices have reiterated the fact that yes, 2016 has been a bit of a washout year, a bit of a lull year really for Indian equities, for the indices as such. But come 2017, we'll be talking 9,000 and beyond on the Nifty once again. And so our question of the day, will the Nifty make fresh record highs in 2017? Good evening to both of you, Neeraj and Manav. Let me start off with your perspective on this. How do you feel about the new year? Neeraj, you go first. You think the market, amidst global uncertainty, local uncertainty, with some bit of clarity coming in post-budget, can actually go on the path of that linear move to 9,000 and beyond?
Yeah, good evening and a very happy new year to you and all the viewers of ET Now. I feel that the kind of opportunity that is there in our government's hand, whether what they can do with this budget, and the GST should also come through very soon now. So these moves coupled with whatever has happened because of demonetization, money with the banks and CASA, all this can really contribute a lot in the Nifty making a dash toward the new highs. And though initial, I think 2-3 months can be challenging, but I think post that we can see results if we have a really good budget. I think a lot of investment can be kick-started and a lot of infrastructure push can be given in this budget. There is an opportunity, so government has to take this opportunity and go ahead with all this. And I think then there is no stopping from us to go and test a new highs.
But so you think post-March that move can begin?
Yeah, I think this March quarter can again be a challenging quarter. So I think the quarter after March and can be, if we even have, then there'll be even expectation of the monsoons coming in. You have to see what kind of predictions you get for monsoon. So that is a quarter which is April to June when I think the market can start seeing the results if any good push is given in this budget. And GST should also get implemented by second quarter or the first or second quarter of next fiscal.
Manav, come to you, and what's your own sense on the charts? Are we really paving the way for fresh record highs in 2017 for the index?
See, at the current levels, definitely the markets are nearing a good bottom, and the reversal that we saw last week is definitely indicating that at least a short-term or a near-term bottom is in place. So, as we go close to the levels of sub 8250, eventually beyond those levels is when the real momentum will come in the market, and it's only then when we'll further analyze. But I think the markets recently has corrected 50% of its recent decline that we saw from the, we've seen a good rally from the March lows to the September. So we've already retraced 50%. It's a very good correction that a bull market has. So I think overall a good healthy correction and a breakout beyond 8250 on a weekly monthly closing basis would definitely at least confirm that 7900 is a good low, and keeping the overall oscillators also in the picture, I think we can definitely take some sort of a position at current levels and can anticipate further rallies to come forward. On the immediate basis, we are looking for targets of 8400 to 8450, and I think that is quite likely by this series itself. So for the near term, the market looks quite bullish.
Right. Gentlemen, stay on with us. Let's just quickly go across to our research desk where Yatin is standing by to take us through the auto sales numbers for December. And, it hasn't looked bad at all. Fairly decent from what the expectations were. Yatin, of course, joins us for the summary.
The auto sales for the month of December have surprised the street. Largely, the analyst community expected the adverse impact of demonetization, and probably, the actual numbers indicated that there was little impact of the demonetization. And starting with Maruti Suzuki, their overall sales figure were down almost 2 percentage points to come in at 1.17 lakh units. But if you look at the domestic sales, only a 4% decline was seen there. Of course, the company says that they have received good orders for the month of December, and probably, the January and February months could be much better than the performance of December. Bajaj Auto, that was probably the sole disappointer when it comes to the export market data also. Domestic sales also fell, so the overall sales figure were down nearly 22% for Bajaj Auto. Eicher Motors continues to surprise positively, a 42% growth seen in their Royal Enfield sales. Ashok Leyland, we were expecting a 20% kind of decline for Ashok Leyland this time, the month of December, but the sales fell only 11% despite the adverse impact of demonetization on the commercial vehicle industry. Mahindra & Mahindra, a clear surprise here, one of the biggest gainer in the auto segment today. If you look at the December total sales in the automotive segment, down only 4%, and if you look at the tractor segment, that showed a growth of 9%, contrary to the street expectation of a decline. Escorts also, we saw 15% growth there. Others, including mid-caps like SML Isuzu and Atul Auto, saw a growth of 6% and a fall of 36% respectively.
A good surprise there actually for the automakers. So let's see whether actually the normalcy that was expected to come into the markets with remonetization once demonetization was done, whether that actually overshoots on expectations and actually comes in quite quickly, and the adjustment process is shorter than one had anticipated earlier. Let's change tracks, and before anything else, address another piece of news, which is essentially about home loan rates falling and banks going into a bit of a huddle to cut rates aggressively. Tanya joins us with a quick summary of how many banks have actually gone ahead with those rate cuts. And Tanya, tell our viewers on what this would mean for the financials of the bank, especially margins.
The banks have cut MCLRs, and because of that, home loan rates have been impacted. Now, if you look at the top three PSU banks, they have cut their home loan rates are much cheaper than what you would say, for example, an HDFC or an LIC Housing Finance, or even Diwan Housing for that matter. So if you look at it, the spreads between these two sectors are quite deeper, and because of that, the increased competition. Now if you look at it, HFCs like HDFC etc. will have to start cutting rates and become more competitive if they want to capture the same amount of market share that they have been enjoying so far, and that will impact their spreads. It will also get squeezed because remember, the borrowing costs have reduced. However, they have not reduced as much as what the lending costs might have to be reduced by. Now, if you look at what brokerages are saying, Deutsche Bank is saying that they've seen enhanced competitive pressure in the mortgage market irrespective, and an aggressive SBI with such low rates is a very major negative for mortgage financiers, specifically HDFC as well as LIC Housing Finance, and it would mainly impact their growth in terms of market share as well as their NIMs. CLSA again has a similar view when they say that NBFCs, specifically housing loans, may have to cut rates further to be even more competitive, and that might impact margins going forward. And lastly, Jefferies says that, bankers are expected to perform much better than non-banking companies because their spreads will be, squeezed, and a 60 to 90 bips reduction in a one-year MCLR rate could shift volumes from an NBFC to a bank. So all in all, seems like a negative move for the NBFs, for the housing finance companies in particular.
All right, Tanya, thanks for that. Before we head into a break, I just want to quickly touch base with Neeraj on both these sectors. Financials and autos, time to buy. Neeraj, what's your thought?
Yeah, I think so, because I think interest rate sector should do very well with the kind of liquidity that is there with the banks, and the interest rates are coming down. And we've not even seen too much pressure on autos barring the two-wheelers as far as the demonetization is concerned. So demand, I think, will really come back very fast, and you can see growth coming back there on the back of low interest rates and enough liquidity. And financials also, I think, even PSU banks doesn't matter. I think once we get to know about how much of the CASA increase is going to happen because of demonetization, liquidity that is going to be there with the banks, I think that will also, and with the kind of push that we are expecting in this budget, if that comes through, then the credit growth will also come, which is not there right now. So that liquidity coupled with credit growth can have a real positive impact on the banks also.
And Neeraj, I just wanted to talk to you a little bit more about within autos, the outlook for Maruti. Now, some believe that when it comes to the auto basket, rather than going with Maruti, which is like a consistent HDFC bank of the auto space, one should look at the undervalued plays, whether it's the Escorts tractor business or for that matter M&M, where also value is unfolding in terms of the kind of traction that the business is witnessing with the SUV as well as the rural focus of the business. How would you really position yourself in autos? I know you gave a broad view, but specifically in terms of specific trading ideas and investment ideas, what would the portfolio comprise of?
See, Maruti will still be in the buy list because Maruti is also corrected because of demonetization and the market correction. I think valuation-wise, Maruti can still give you a 20% upside over 1 year. So, that kind of 1.5 years. So that is a decent upside which you can get for any large cap stock. So Maruti would still be there in that category. And Maruti is something which is really interest rate sensitive, and you can see the direct impact coming on the demand when interest rates are coming down. So Maruti will still continue there, but you rightly said about Mahindra and Mahindra. There even SUV business is doing well, and even the numbers there are also encouraging. I think Mahindra and Mahindra should be another one which is looking very good. The tractor numbers being very good this quarter, this month also, and I think though there will be some lull now as far as tractor is concerned, then again in 2-3 months again that demand will come back with the next sowing season. So tractor would be one. You should still the demand can come there and it can help Mahindra and Mahindra with the numbers. So these two definitely should be there. And Tata Motors also, because the international business there should be one stock which can do very well. See, the only problem right now is two-wheelers where the numbers are not that great. So two-wheelers can be a little more sluggish. There can be some more correction or consolidation around the come, and you may still have to wait for this month numbers. So two-wheeler for the time being I would avoid, but I think these names like Maruti, Mahindra and Mahindra, Tata Motors can be bought even at the current levels.
You're also bullish on Kalpataru Power and Praj Industries. Are those your top bets for 2017?
Yeah, both the companies are looking good. Kalpataru because they have a good order book for their transmission business, and they also have a 70% stake in JMC projects, which that company is doing very well. The order book is also very good. So if one has to play capital good infrastructure kind of a mix, I think this company is in the right space, and valuation wise also it is looking good. And besides this, Praj, because Praj has a new business, that is the water business, which now is 25-27% of the total business, and that is also growing well, where the margins will improve as the scale is improving. Plus, they recently tied up with the leading OMCs for setting up bioethanol plants. That's also a big opportunity for them for the next couple of years. So Praj also numbers will improve for the next 1.5 years. So the next 5 quarters are good as far as the new business is concerned. I think these two companies in the capital good infrastructure should do well over 1 to 2 years.
Okay. Praj Industries, Kalpataru Power are both top bets by Neeraj Dewan. Manav, come to you, and what would be your top strategies to approach trade tomorrow?
Yeah, my first call is buy on UPL. Actually, the stock has seen a very good consolidation on the weekly charts, and most importantly, UPL has been in a very good uptrend and has not actually breached its important long-term averages. So the overall primary trend has been positive, and the recent fall was more or less corrective in nature. If we see also on the daily perspective, there has been a good reversal formation, which indicates that eventually the stock is likely to head higher, and even at the current levels, there is a good risk-reward ratio for at least for a short-term perspective trade. So the stop loss for the stock can be at 645 on the lower side, and for an upside target of 690. My second call is buy on Bharat Forge. The stock has recently observed a good decline from its recent peak, and the stock has observed a good corrective decline, which confirms the stock will eventually move higher. Also on the 60 minutes chart, there was a breakout of an inverse head and shoulder pattern. So the overall oscillators and the pattern indicates that at least a short-term bottom is in place, and eventually the stock is likely to move higher and retest its recent swing high. So for Bharat Forge, the upside target is at 970, and the stop loss on the lower side can be placed at 910.
Audio